Hey, everybody. Welcome back to the Blockware Intelligence Podcast. This week I have on Nikita Fadeev. Welcome to the podcast.
Hello, Joe. Great to be here.
Awesome. So the audience might not know who you are, so I definitely want them to get, your background and how you got into this space.
Sure. So I guess in a few words, so I got into crypto 2016. I was a student back then doing maths at university, discovered Bitcoin. Was super pumped up about it, and I immediately thought about like opportunities there. I did some research, and that led me think there could be a bunch of things that could be done there. So the angle initially was to create a team, start building some strategies, and we actually pursued it. Found a bunch of friends and guys that were sharing the vision, and we kept on building and eventually decided to, on the back of good results, to go serious about it and try to go full time. So after graduation, we joined Fasanara Capital to effectively launch a fund together. So me and another guy. We just literally set our exams, and then I came to London to try to launch a fund in crypto, focus on quant strategies. So that was 2018. Took us about a year to get set up, do all the onboarding, start the relationship with all the counterparts, and mature the strategies. So we launched 2019, little by little, ramped up size and AUM. So right now, fast forward, we are 15 people doing a lot of market making, liquidity provision in the space. We also have a VC fund, so we participate in early stage venture, just looking to empower the growth of the space and contribute to the liquidity of the market.
Nice. Very cool. Yeah, we'll get into your fund, and I want to, learn more about that specifically. But I want to dive a little bit deeper on how did you originally discover Bitcoin? What do you remember the exact moment when you're heard about Bitcoin, and what were your original thoughts behind it?
Yeah, well, actually, I do. It was like a phone call. Somebody, just like a friend of a friend, he called me up out of the blue and said, "Look, there is this thing, Bitcoin. It's super exciting." And the way he pitched me was a bit unconventional, I guess. He said "Oh, it's there are a lot of rich guys and they want to shield from all the things that's going on in the world. They want to keep their assets safe, and what's better than crypto, which is decentralized, distributed, and pseudo anonymous, but you can do back then just fine." And so that just got me thinking, okay, there is something interesting here. Just kind of the technological development, but also this particular use case, which was particularly relevant for me, but just the whole idea of what can be done on the back of having this distributed ledger, which allows people to send transactions P2P without a central body that needs to verify this transaction and establish the trust between the counterparts. So that was immediately interesting for me, but that most of it just flew above my head. And the one analogy or one nice phrase that I walked away with is he said it's like a virus, so it's like a vampire attack. Somebody bites you and spreads the virus, and so then you're the barrier of the virus, and you keep on spreading it. So I walked out with more questions, and I just kept on learning, and eventually I got to the markets, and I was like, okay, these things, they're kind of the same, but why they price different on different exchanges? And so little by little, we started, doing that, putting more size, adding more technology, and kind of things from top.
Yeah. It's very interesting that you thought of the idea of it as a virus, because I think that's pretty accurate. A lot of people, once they really get Bitcoin or at least think they understand Bitcoin, they definitely have the urge to try to help more people understand what this technology is. I'm curious, from the moment you originally heard about it to the moment where you're okay, I need to build a career, build a company in this space. What was like the time difference from that? Like, because I remember
Yeah.
when I originally, heard about Bitcoin, I was like, okay, this thing is interesting. It keeps going up, but I think it's like some sort of Ponzi slash bubble type thing. And unfortunately, I didn't buy when I originally heard about it the first time. I'm curious, like, how long was
Yeah.
the difference between like your first touch and, really getting deep into the space?
So I would say like I heard about it, properly probably, summer 2016. I don't remember what was the price, probably like, early thousands, or, single digit thousands. So it wasn't like, super early, but, early enough. Yeah, just kind of, initially like didn't do too much, like, actively just kind of learning a bit, on the background. But then, when we started, to take a bit more serious approach, basically when the year started in uni. So, I had like 10 people working with me from different universities. We had like, three strategies that we're pursuing. And so effectively, then we kind of did like a pretty deep dive. And there was like one particular, I would say like relatively eye-opening moment. So I prepared like presentation where I looked at all the funds that I could find that were more of a hedge funds rather than VC. And the striking realization was that they were just pretty random people running like relatively trivial amounts of money. So they weren't like this huge institutional players that been doing it for decades, that already polished every single inaccuracy of the process, and just well-oiled machines running at huge scale. So crypto felt like that there is opportunity just by using the eyes kind of thing, but also kind of as a function of it, the competition, the feeling was that they weren't like so advanced. So it felt like, okay, so coming out of uni, we can go to the banks, to the hedge funds to start the career, but then our opportunity cost is pretty small because, well, we're not like at a high paid job that we can't move places. So we actually thought like, okay, what's the worst thing can happen? Chances are that this Bitcoin thing and like crypto more broadly are gonna go mainstream in the years ahead. It was more of a coin flip kind of thing back then. It wasn't so deeply thought through, but it was something that we were excited about, something with like a relatively low barriers to entry, and like something that again resonated deeply with us. And whoever we were speaking to, like we felt like we knew at least as much, and rarely like much less. So we're like, okay, it's decent opportunity. And then as we kind of kept on building, we realized that it was probably decent bet in hindsight.
No, that makes a lot of sense. I wanted to definitely talk about your fund, but I have a couple more questions that I want to get to. If an institutional investor comes up to you that maybe has no idea what Bitcoin is, how do you currently like pitch it to them? Like, how do you explain it? Like, hey, like this is technology that's here to stay and it's important. How do you like? What's your pitch?
Well, I think like by now people overall warmed up to the idea of Bitcoin, and I think everyone understands roughly what it is and has a view. It's usually polarized, either people in love with it or people hate it. It's funny, like we've been talking actually, today earlier with some institutional player, and what they said is that some players like them, and these are huge pension funds, they bracket crypto together with nuclear and Russian bonds, and that's kind of the only three things that they wouldn't touch. But effectively, just to come back to the question, to the initial question, I think that job is kind of done. So it's rare that again that you need to say, oh, it's like this idea of like P2P money, which is very decentralized, that is pseudonymous, immutable, and all the nice features about it being trustless and so on and so on. But effectively, I think people roughly understand what it is, and now it's okay. People get the point that it's probably not going to go away. So then, how can they take advantage of this opportunity? And so for people and for investors in particular, for the larger ones, they have the constraint that they need to go in size. because if you sit on tens of billions, hundreds of billions, deploying like 5 million, 10 million makes very little sense. So they were going through the venture route, and then they had to understand a bit better like what is this thing, what is it trying to achieve, and then that is like a proper pitch, which we're doing a fair bit now. And there the spin is around just kind of the world going more digital, right? So you spend more time on your phone than you ever did, and you're gonna do even more, and in the future. And people just morph in their physical reality into virtual. And that trend is just irreversible. And on top of this is, the adoption curve in crypto just has been like unmatched, for the internet, for mobile, for any of those things. So it's kind of really like a big trend that's already been forming over the past, 14 years. The anniversary was like yesterday or a couple of days ago. So it's pretty exciting, and I think people realize it, but still kind of, there are all sorts of, negative connotations around the space because people don't spend enough time to really like, understand that the full set of implications and like what is the scale of the experiment that is going for this thing crypto, and like how disruptive it is already and how disruptive it's going to be once these things mature and and get a bit more momentum behind their back.
Yeah, I think you made a great point about like the adoption curve of Bitcoin. I know our team has done research on Bitcoin adoption, and we use Glassnode data to basically show the number of entities that are on the Bitcoin blockchain. And even, during bear markets, while it's at a slower pace, there's still more people joining the network, holding their own private keys and holding their own Bitcoin. So that's, a great point. Your firm, I know, I was looking at the Twitter the other day, and you guys had an interesting thread basically about market game theory and human bias. And one tweet specifically in the thread kind of caught my attention about how there's these meme coins in the crypto space that are worth, $100+ million. There's no promise of future cash flow. And I'm just curious from your perspective, how does this actually occur in the market? Because a lot of people might look at this and think, okay, this is a joke, like it doesn't make sense. But somehow the reality is these coins are actually trading for $100 million. And Dogecoin, for example, is $1 billion asset. Well, how do you think that occurs and why?
Well, so it's a bit technical. It's the idea of like how big is the supply, right? Like technically, if you imagine that I create a coin, Nikita coin, and then like I issue, 100,000 units, and then only one in circulation, right? And so I list it on the exchange, and then you buy it for $5, right? So 100,000 is the total supply times $5. 500,000 is the market cap, right? Or like fully diluted value if you want. Yeah, full diluted value to be precise. And then cool, but then it doesn't mean actually much, right? Like you probably wouldn't be able to find another guy who would buy this for $5 from you. So it's kind of a lot of these things, they're quite thinly traded, and they have pretty small float, and that's for meme coins in particular, bunch of guys, they bought it, they forgot that they bought it. A lot of people just sit on the big supply because they got airdropped it. There were like thousands of these meme coins. So like all of these dynamics about the supply distribution is total mass, total randomness, and then some small percentage of it is traded, but for somebody to buy it, effectively they need to express some view other than that the market needs to go up and so on. And so that's where like some of these things are a bit tricky, just like Hex coin. I think it's still trading like some crazy valuation, right? And a lot of these completely dead projects that are still sitting on like 100 million and 500 million FDV, because their supply is so thinly traded. Maybe VCs or like some early investors, they just sit on it. They just want to wait out the bear market, and it's kind of just not trading, but like these market caps and valuations, they're a bit, meaningless. Just like there was a nice interview with Vitalik. So he went to Lex Friedman podcast, and so Lex asked him about the Shiba. I think it was Shiba, right? So they donated bunch to Vitalik, and it was like 4 billion or something, some crazy number. And he said like, yeah, I could have liquidated it, but I would have realized like a tiny, tiny percentage of it. And that's kind of the idea of price impact, right? And once you're operating with these, large numbers, say 100 million plus, like none of it is liquidatable without like price being completely, run into the ground.
Yeah, no, I think that was very well said. And I think, in my opinion, personally, that's one of the flaws with looking at the quote unquote Bitcoin dominance metric, where a lot of these small cap, altcoins that have a very small float that are actually trading, and maybe they're worth on paper $100 million. In reality, they may be worth like, a couple $1,000 or something. And it's interesting, and in comparison, if you market sell $500 million worth of Bitcoin, yes, price is going to get hit, but it's not going to like go to zero like, Shiba might.
Well, so I would caveat it a little bit, right? Like if you market sell 500 million, even on Binance, I would suspect that probably you would, it would just go almost to zero. And then there will be like all sorts of limitations that, such big orders, or like, you can't, move price, so much, so aggressively. But I guess, effectively, yeah, there is a lot of, liquidity for Bitcoin. And there is, a lot of, marginal buyers at different levels. Probably, at 20K, there is, a lot of, buyers like at 12K, at those, significant, levels. So, price would, very quickly bounce, but if you were just to throw in 500, even on like most liquid exchange, probably it's gonna like, yeah, smash the price,
Yeah,
but
no,
then instantaneously kind of thing, just fat finger kind of thing.
yeah, great point. I guess by market sell, I meant more of like slowly on unloading your position over,
Yeah, like T-Rob.
48
Yeah.
hours or something like that. Because I'm sure,
Yeah.
like that happens a fair amount, and there's obviously a
Yeah,
ton of
yeah.
Bitcoin that's traded. But yeah, this is kind of getting, I guess, more into what your firm does, since you said you're one of the largest liquidity providers in the space. Can you explain, what that even means to someone that may not know,
Sure.
and dive deeper into what your firm actually does?
Yeah, so I guess like in broad strokes, the idea of liquidity provider is somebody that's gluing the prices together. So in more precise terms, what it means, and there is like a whole spectrum of actual activities, but um, it- to give a sense, it's effectively looking at prices across tens of different exchanges, and finding where price is high versus where price is low for the same asset. So Bitcoin, say on spot, Kraken versus Binance, right? And you're just providing two-way market on those two exchanges. And then you could think, okay, what about Bitcoin versus DAI, or Bitcoin versus Tether, or Bitcoin perpetual, or Bitcoin future, and all those permutations. So it's effectively just parsing all the prices in real time, ranking them, and buying the cheapest, selling the most expensive ones, kind of in real time with like small orders. But then that's adds up to big numbers at the end of the day.
What exchanges do you guys mainly trade on or provide liquidity on? Or I'll let you answer that, and I have another kind of follow-up question.
Yeah, I mean all the main ones, like the most liquid, the Binances of the world, FTX, OKX, Bybit, and many other ones.
Nice. Yeah, and I think recently, and I could be wrong with this, but I've seen that basically Binance spot volume for Bitcoin specifically is basically like taking over the market. And from what I understand, maybe it's because of they don't charge fees anymore for a specific subset of customers.
Yep.
Can you like explain that more?
Sure. So probably you've seen the graph that like Binance did more spot than like all the exchanges combined or something like that on one of the days. Yeah, so Binance is like crazy aggressive, and it's hands down the biggest exchange, by all sorts of metrics. And so they, as of I think maybe like 3, 4 months ago, they introduced zero maker, zero taker for BTC across all the fiat and stables. So I think there is like 14 markets or something against Bitcoin. And so that's is pretty interesting, like how that impacts market structure. So as a result, the book is the bid ask is very small. It's 1 cent. So one tick size on Binance is one cent. And so effectively, the book is very very granular, and so like across the bid ask, it's usually pretty thin, but then like it ramps up quite quickly. And so there is a lot of taking going on as a result of it, because well, for people it's for free to cross, and well, to cross, well, you just pay the whatever is your price impact, but the fee, the commissions are zero. While usually like for other coins, and it depends, what's your deal with Binance, but you could be looking at anywhere, at 10 basis points, which is like really really big deal for you, to like whatever the best fee tiers are. So it's kind of that is one of the main drivers, but other than that, this pretty similar story for other coins. Perhaps a bit less extreme, but still the same theme is that Binance has by far the most trading volume and just retail activity, I guess. Liquidity, market makers, and all that.
Do you see other exchanges potentially following Binance and basically dropping their fees to zero? And if so, like what's the business model for exchanges at that point? I guess Binance is making their money off of all of their other non-BTC pairs.
Yeah.
But do you see the other exchanges, following suit?
Well, Binance is in a beautiful spot. It's they kind of won the market, at least as of now, and this things is a moving target, because Mt. Gox back in the day was like 80% plus of the market, and then Poloniex was at some day was so huge, and BitMEX as well. So it doesn't mean that the winner of today is the winner of tomorrow. But Binance is such a well run, such a diversified operation. It's so like well polished, and they sit on just the most cash like in the space, and it's been organic. They have BNB reserves like tens of billions, and just cash reserves like huge sums. Um, so that's kind of the lead, and it's chicken and egg problem. You can have zero fees, but if there is no taking, and just market makers, they don't want to trade with themselves, right? Like there has to be some exchange at risk of risk between counterparties that is long term, sustainable. And so in Binance is like really really diversified set of traders that exchange the risk between themselves, and that's kind of how these volumes are pretty sustainable. And Binance is obviously like innovating a lot with like BUSD, which as a stable coin had been doing like phenomenally even this year, and like overall other markets like on the perp side and so on, portfolio margining. So it's really cool exchange, but obviously the likes of FTX and several other ones are not sleeping behind, and are doing a lot of good job as well. So it's I think say Kraken for many things, they have like some of the most competitive fee tiers, but still like it's been struggling a little bit.
Yeah, exactly. It's interesting how you said, some exchanges, they see like their limelight, I guess, where they do exceptionally well. Obviously Mt. Gox, but obviously they got hacked and that caused, obviously major issues. But, you see the same things like something like BitMEX, where I guess they basically created the perpetual swap, as far as I understand. And, that was very popular for trading Bitcoin with leverage. And then they kind of went off the map in comparison to something like FTX or Binance.
Yeah.
It's very interesting.
Yeah, it's usual innovators kind of not dilemma, but like situation where you create a product and then market determines, how good it is and so on. So BitMEX was good enough, back in the day, because it was the most liquid, the most active, and everything. But there were a lot of issues, right? Like the matching engine was really, really bad. There were a lot of, overloads, and so there were a lot of, technical issues. When there was 2020, collapsed, then they went offline for like 40 minutes over like, two periods. So it was a lot of, challenges, bunch of unclear things with the insurance fund, and a lot of, adverse, marketing from them, and most importantly, just from the product standpoint, they were, having just one pretty much market, which was the Bitcoin, the inverse contract, which was nice, but then all the other contracts, they were denominated in BTC. So there were like, these weird quantum contracts, which were like a bit tricky, or like there were, some futures, but then, denominated in BTC. So it was like just, strategical point that the guy said that, okay, we can't trust any other blockchain, so we need to stick to Bitcoin and do all the business in Bitcoin, but that just proved to be a bad, decision, and it just didn't allow them to scale. While FTX, came up and did this really well thought through uniform portfolio margining system, which you can have Dogecoin, ETH, BTC, and it's all kind of counted together towards your collateral. You can open whatever positions. So there was like a lot of innovation, a lot of um, iterations, and some guys were just slow to adapt, slow to uncover new markets, get the licenses, open new franchises, hire and build talent. So it's kind of normal process as market matures. Again, winners of tomorrow are not necessarily winners of today. But again, BitMEX did quite well for themselves. Not to
Yeah.
take anything from them.
Yeah, no, I think you made some great points. I thought it was interesting how basically said that, BitMEX was this basically Bitcoin focused collateralized, trading platform. And then FTX came in and was like, hey, actually, you can use other assets as collateral. And that ended up taking market share, which is interesting. I do want to hear more about your VC arm. What do you guys look at? Like what products, what services, what do you
Yeah.
guys like?
Yeah, so we're a bit different to the traditional VC fund. So our mindset is as follows. So like we're doing quite a lot on the HFT front, and so we see a lot of exciting projects like on the infrastructure, kind of the missing beats for us to kind of operate at like full deployment and like full efficiency, kind of from the data standpoint, or like from some lending, or from like trading angles. And so effectively, like we set it up this fund to empower the growth of the whole ecosystem, be technologically driven. So leverage our knowledge and expertise from trading on CeFi, DeFi venues, and help this project to achieve success in a Web3 way. So running a validator node if needs be consuming their data, and helping them to get listed on exchanges, market making for them, and whatever that they could need, and lending or borrowing and so on. And we're kind of sector agnostic, but the angle with all of the investments is how can we be the end user of the product. And so if it's good enough for us to be using for our day-to-day trading activity, then probably a bunch of other people find it useful. And so in terms of the buckets, like we look at early stage ventures, so this could be pre-seed to Series A. It could be the SAFTs or SAFEs, so the token deals, or could be the equity or token plus equity. Then we can also be buying the tokens outright on exchanges with some lockup or no lockup. And the final bucket is thematic opportunities, as we call it. And there we're looking at anything that's a bit more funky, more innovative, something that is could be like NFTs or could be something along the lines of the in-game assets or those kind of things. And the way we kind of put it all together and how we frame it is that we say there is this huge technological revolution that's coming, Web3. Now you can actually own piece of the network, but then just like it's a bit unfair or a bit naive to use the old ways of evaluating projects and thinking about value creation long term. And so you kind of need to really be like open-minded and think what could be the best asset. So an example that we give is that say you want to make a bet on metaverse. So you have Sandbox or Animoca brand behind them, and so you can buy equity in the company. You can buy the token or you can buy the land. And so far probably the equity was the best investment, arguably, or the token. But then who knows? Maybe like going forward, it's gonna be different. And so we wanna the way we kind of reconcile it again is we think about risk rewards conditional on liquidity. So all of these investments they have different value realization timeline and different liquidity profile, and so you can be having different paths to liquidity. And so framing it that way allows you to position and like expect a certain path to liquidity and promise to or prepare your investors to certain outcomes that can happen with some range of certainties. So it's kind of how we think about it, and being very technologically driven and trading heavy. Some of these investments are just really plug and play for us, and like really easy to bootstrap and leverage our ecosystem to pull them off.
Very interesting. How have you guys been like deploying capital from 2021 compared to 2022? Obviously, 2021 was massive bull market. Everyone was very excited, making lots of money, or at least hopefully some people were. But now, obviously, this year it's been a pretty tough bear market, and there's obviously an extremely uncertain macro situation. So have you guys slowed your capital deployment? Are you writing smaller checks, or are you guys still full steam ahead?
So actually, I guess luckily and unluckily, we weren't active last year, really, like maybe just towards the end. So it was just for majority of the time a prop fund, and so we're just deploying our own capital, and then we just launched it towards the end of the year. And so, luckily that we didn't deploy at the all-time highs. But then unluckily, if we were to raise a fund during the end, towards the end of bull market and deploy it in the bear market, then that's kind of always the best play. But you never know those things without the hindsight. And so for us, in terms of deployment, obviously the turnover of the deals is much lower. You actually get a chance to look at what's the team doing, or what's their plans, or what's their go-to market, what do they have in place, and so on and so on and so on. Because before it was just like complete chaos. It was just few days to make a decision. Everything gets oversubscribed at crazy valuations, and fighting for capacities is like really like a uphill battle. And so right now it's much calmer. You actually can think things through, take your time, and deploy capital with at much better rates, with much more due diligence in place. I think the bear market definitely showed itself on the private side. We see valuations probably slashed like into 4x. Some of these pre-seed deals that were flying at like 50 million last year. So now those things just don't have any legs. And people, but I think net it's very positive for the space. It eradicates all those rent seekers and net negative, participants in the space, and kind of forces people to have a bit more longer term view, and also like for the investors to a bit reconcile based on their past experience, because practically like all the VC guys got burned big time this year, and so it's a moment for them to be like, okay, maybe these things they just don't work too well, or like the value is not sustainable. Those like one trick pony for like 6 months projects, like there were too many of them, and people just need to maybe grow a bit slower but sustainably. That's kind of in the current environment is the game.
Yeah, I think that's a very interesting point. Coming from the Bitcoin mining industry, particularly, we saw a lot of companies and take on a ton of leverage, raise a ton of capital all throughout 2021, and most of them went leverage long basically, and bought a bunch of machines that they may not be able to afford, bought a bunch of mining infrastructure that they may not be able to afford, and some of them that took on too much debt rather than equity are in a load of trouble, especially some of the publicly traded miners. Do you think in the future more people, not just in the mining space but in the space broadly, will use maybe bull markets to like build up like a cash position and maybe like be a little bit more conservative to where they can survive these bear markets better? Or do you think when the next bull market comes around, everyone's going to get money eyes again and start going leverage long everything and still blow up?
Well, so there are a couple of interesting things, and this kind of nicely reconnects to what I was writing in that thread about the game theory, right? So it's kind of to paint the picture. Everyone, when they zoom out, they're like, okay, these people are just greedy. Like a lot of these people just made 1,000x in a day, or sorry, in a year. They went from like being broke or like just middle class to like printing 10 million plus, and then just losing it to the last dollar. And they're like, oh, how stupid they were. But it's kind of crypto is just so addictive with all of these narratives, and it's like it's a bit like casino, right? You convert in these virtual chips, and you're like, okay, this thing costs 3 is what is 3 is? It's not much, right? It's just some picture. Might as well do it. But then in real world, when you like multiply it by the price of ETH, then you're like, oh, it's actually some meaningful amount of money. And so I think like a lot of these people just get off guard and puzzled by the volatility, right? Bitcoin has enough upward volatility, but also downward. It's very reflexive asset. And so this greed that's been powered by the VC money. So you made like a nice analogy with the mining companies. It's all about competition, driving the margins higher, winning the market share, just to do the another raise, because there are these guys with like unlimited capital looking to scoop in at next at next round at whatever valuation, just so they deploy and they can raise next round. So it's kind of I help you, you help me kind of thing indirectly without the handshake. But effectively that kind of is gone, and whoever hasn't realized it, too late, too bad. So you kind of need to be sensible, but in the end you need to strike a decent balance, which is not mathematical, and it's a bit of art, a bit of science, and draw the line to say, okay, should I grow organically and perhaps lose some places on the leaderboard, but at least should things go bad, I'm not needed to cut off like 50% of the workforce. That's kind of it's a question for everyone to answer, and they need to kind of think about marginal utility of money and like scale and so on and so on. So it's a bit of personal thing, but for sure there are some very clear extreme examples when that balance was completely not thought through, and it was growth at all costs, which again is like as you see like examples of the WeWork, or some examples on the crypto lending, front, where some of these companies were just chasing valuations, becoming unicorns in 2 years, 3 years. So there were a fair bit of that, but as the tide lifts all boats, some of the people, in the end, were left swimming naked.
Yeah, I definitely liked what you said, or definitely agree with what you said about, a lot of this space being a casino. And I think, casino, for better or for worse, is a very, popular business model. Maybe it isn't necessarily great for the world or for, the customers, but the players or the big players in the game can, make a lot of money doing that. Yeah, I think that's probably a good spot to wrap it up. One more question, I guess, and then we can close it out. Do you have any opinion on, where we are at in this cycle? Are we, near the bottom as Bitcoin bottomed, or do we still have a ways to go?
It's really tricky to say. I would acknowledge the fact that there is a lot of uncertainty, and like some of these exogenous shocks can come from whichever direction. But also, this complete, black swans. But then there are a lot of, white swans where you can expect, a couple of areas where, you could be, hit badly. I think we just need to wait out and see how it goes with the cycles. Sorry, with the rates and with all of the inflation numbers, with job reports and so on. It's a lot of it is one trade. We've seen a bit of decoupling and better performance of risk assets in the past few weeks. I think like overall, chances are that we bottomed. I think there was just enormous amount of the leveraging that's been done over May and June. There was like we were dragged much further than what was reasonable, whatever that means. And we revisited those lows and bounced back from them. I think unless there is like some real trigger that kind of changes the picture drastically. I think for crypto, it's more likely gradual upwards trends rather than necessarily going lower. But to be honest, it's very difficult to say at this point.
Yeah, no, I think that's probably about my general idea of where the market stands as well. I mean, I think that, we could certainly go lower if, U.S. equities just get hammered to another 20% down. Then obviously I think probably Bitcoin and everything else is going to go significantly lower. But, I think it's kind of, in the long run, it's unprofitable and not very smart to be a bear. So you got to be long at some point. But yeah, I think this is a great conversation. Do you have any place? I know you have a Twitter. Do you have anything else you want to plug or let the audience know about?
No, I guess not really. I guess like you can find me on LinkedIn or Twitter. Just use my name. I'll be also I also have a podcast which I was a bit lazy about for the past a few years, but I'm looking to restart it. So I'm going to bring some people, talk about crypto and hedge funds. That's coming probably in the next few weeks.
Sweet, sounds good. Yeah. Well, we'll wrap it up. Thanks for coming on the show.
Thank you very much, Joe. Speak soon.
Awesome.